Alright, so you're thinking about trading gold? Good. It's a market that can literally make or break a portfolio in a matter of minutes. In this breakdown, we're going to cut through all the noise and give you a professional's take on the absolute fundamentals of trading xauusd. This is the foundation you need to start smart. Let's get into it. So, what's the big deal with gold? It all comes down to its volatility. Those huge price swings, well, they create incredible opportunities for profit. But here's the catch. That very same volatility can wipe out an unprepared trader in the blink of an eye. The key to succeeding isn't avoiding the risk, it's about understanding and respecting this two-sided nature. To guide you through this, we've laid out 5 essential steps. First, we'll dig into what makes gold so different from every other asset. Then, we'll uncover the real drivers behind its price moves. We're going to give you a simple but powerful strategy to get started. Cover the one survival rule you absolutely cannot ignore. And finally, map out a clear path for you to begin your journey with confidence. Let's start with a basic truth. Gold is not like a stock or a regular currency. It's got its own personality, its own rhythm. And to trade it profitably, you first have to understand what makes it tick. Everything starts with this ticker, xauusd. XAU is the chemical symbol for gold, and USD is, of course, the US dollar. So every time you see this, you're looking at a live battle. The value of 1 troy ounce of gold priced in dollars. This makes it a fascinating hybrid. It acts like a currency, a physical commodity, and the ultimate safe haven when fear hits the markets. And this chart shows you exactly what that volatility looks like in the wild. Let's just compare it to a major currency pair like the euro-dollar. Gold can move anywhere from 200 to over 500 pips in a single day. The euro pair, you'd be lucky to see 80. This is the raw power of gold. It offers huge potential, but that same power is what makes it dangerous if you don't respect it. We know gold is volatile, but why? To trade successfully, it's not enough to just look at a chart. You need to understand the fundamental, powerful forces that are pulling the strings behind the scenes. There are really 3 main drivers. First, interest rates. Gold doesn't pay you anything to hold it. So when interest rates on bonds go up, gold becomes less attractive. Its price tends to fall. Second, the US dollar. They have an inverse relationship, kind of like a seesaw. A stronger dollar means gold's price often drops. And finally, the most powerful driver of all, fear. When geopolitical uncertainty, wars, or financial crises hit, investors flock to gold, sending its price soaring. The technical patterns on your chart mean nothing if they run headfirst into a macroeconomic brick wall. A truly solid xauusd strategy has to account for these fundamental drivers, period. Okay, time to get practical. Let's build a concrete game plan for a new trader. So what's the best approach for a beginner? It's simple. Don't fight the current. Gold tends to move in powerful, sustained trends. Your job isn't to predict the future, it's to identify the trend and ride that wave. This trend-following approach is the foundation of your first solid xauusd strategy. Here's a simple 3-step method using the 4-hour chart. First, we use the 200 period moving average to know which way the main current is flowing. If the price is above it, we only look for buys. If it's below, we only look for sells. Next, we don't chase the price. We wait for it to pull back to the 50 period moving average. And the final, most crucial step, we wait for a candle close back in the direction of the main trend. This discipline keeps you from jumping in too early. It's simple, it requires patience, and it works. Now listen up. This next part is the single most critical skill in trading, managing your risk. The key to managing risk in gold starts with understanding the lot size. In forex, a lot size refers to units of currency. With gold, it refers to ounces. A standard lot in gold trading is 1, representing 100 troy ounces of physical gold. Because you're controlling 100 ounces, for every $1 the price moves, that's a $100 profit or loss. A tiny $10 move can happen in seconds and result in a $1,000 swing. Amateurs guess their lot size. Professionals decide exactly how many dollars they are willing to risk first. This isn't just a good idea, it's the very foundation of a sustainable xauusd strategy. Gold demands respect. It requires a plan, discipline, and precise risk calculation. If you get lazy or greedy, it will find you out really fast. Okay, let's pull this all together and map out a clear path. Here is your path forward. 4 simple rules. 1. Stick to one strategy. Master the trend-following method first. 2. Always calculate your risk in dollars before you click the button. 3. Practice relentlessly on a demo account until this becomes second nature. And finally, be consistent. The best strategy is the one you can actually stick to. The map is in your hands. Are you ready to take that first step safely?